Hello, I'm Tiffany Smith, and today we're going to go over the PIT B and credit for taxes paid. So when a taxpayer has income that's earned both inside and outside the state, their income is going to fall under special rules, and how those rules apply to them are going to depend on several factors, including their residency status, the type of the income, and when and where the income was earned. And the two different ways we'll see this show up on a tax return is either on the PIT B or on the PIT 1 on line 20 for credit for taxes paid to another state. The first thing we want to look at are the statutory basis for the PIT B and the credit for taxes paid. The first place you go to is the Income Tax Act. In NMSA 7-2-11, the income and allocation apportionment rules show up, which is where we get the directions for the PIT B. And on NMSA 7-13, the credit for taxes paid by other state by resident individuals, those rules will be there in statute. And the other place we look at is the Uniform Division of Income for Tax Purposes Act, or UDIPTA. And in UDIPTA 7.4-1 through 7.4-9 are the income allocations for non-business income. There are rules regarding the business income, but today we're only going to cover non-business income for individuals on the PIT return. And also other places to reference are the PIT 1 and PIT B instructions, of course. And for more detailed instructions or more nuanced situations, you can go to the FYI 310 on community property. And this FYI covers allocations for community property income, or types of examples where the married taxpayers might be filing and be residing in two separate states. So we'll start with credit for taxes paid. The credit for taxes paid can only be claimed when the income that's taxed in another state is required to be included in net New Mexico income tax and taxed in New Mexico. This credit cannot be utilized just by choice or because the taxpayer has realized there's a better tax result for them by using it rather than the PIT B. And so how do we know that income's required to be included in New Mexico net income? Well, we have to go to the allocation and apportionment rules for the PIT B. So the PIT B rules are determining what must be allocated to New Mexico. And many of these rules on the PIT B rely on the taxpayer's residency status to determine if the income is required to be included in New Mexico income tax or not. And there's also additional definitions and considerations that you might want to look at on the PIT 1 or PIT B instructions, for example, military residents, and also Native American tribal resident information as well. So let's go over the definitions for the residency statuses. So a resident is a person who's present in New Mexico for 185 days or more, or they're domiciled in New Mexico for the entire year, regardless of whether they were physically present. So domicile, there's definitions in the PIT 1 instructions on domicile, but a taxpayer can only be domiciled in one place at a time, and a taxpayer could be a resident of one state based off their physical presence and a resident of another state based off of their domicile, but they will only be domiciled in one place. So that's a good thing to keep in mind. For a first-year resident is a person who moved to New Mexico during the tax year with the intent of making New Mexico their permanent place of residence. They're still present in New Mexico on the last day of the year. And for the period of the year that they were not domiciled in New Mexico, they're not considered a resident. For a part-year resident, obviously they're a resident for part of the year. They're not physically present in New Mexico for 185 days or more. They're not domiciled in New Mexico on the last day of the year. And for the periods that they were not domiciled in New Mexico, they're not considered residents. And a non-resident is someone who's not domiciled in New Mexico for any part of the year, and they're also not physically present for 185 days. So there are three types of income that are going to be allocated in the same manner for every taxpayer, regardless of their residency status. And the first one are rents and royalties. Rents and royalties are allocated to the location of the income earning property, regardless of whether the taxpayer is a resident, non-resident, first-year resident, or part-year resident. Also, gains and losses from the sale or exchange of property are also allocated to the location of the income earning property. And finally, income and losses from a pass-through entity. For all taxpayers, this income should be allocated to the location where the income producing activities occur. Now, this one has some special rules. If a taxpayer does have the allocation for the percentage of income and where it was earned, they should use the Pit B to allocate their income based on those percentages. However, if the pass-through entity or trust does not provide the necessary New Mexico apportionment percentages or information that allows calculation of that percentage, then New Mexico is going to presume that all the distributive amounts are New Mexico sourced income, and in that instance only, the taxpayer should use the credit for taxes paid to another state. So for wages, salaries, tips, we're going to use different rules based off of residency status. So a resident is going to allocate all of their wages earned inside and outside of New Mexico to New Mexico, and they can claim a credit for taxes paid to another state on that income. First-year residents are going to allocate their wages earned inside and outside New Mexico after the date they established their New Mexico residency. Part-year residents are going to allocate wages earned inside and outside New Mexico for the period that they were a New Mexico resident, and non-residents are only going to allocate wages earned in New Mexico. For interest and dividends, residents are going to allocate interest and dividends earned inside and outside New Mexico, and they can claim a credit for taxes paid in another state. The first-year residents are going to allocate interest and dividends earned inside and outside New Mexico after the date they established residency. Part-year residents, they're going to allocate interest and dividends inside and outside New Mexico for the period that they were New Mexico residents, and non-residents will not allocate interest and dividends to New Mexico unless they have commercial domicile for business purposes. So pensions, annuities, Social Security, and lump sum distributions. Residents are going to allocate all their retirement income to New Mexico, but they can claim a credit for taxes paid in another state. First-year residents are going to allocate retirement income earned after they establish their New Mexico residency, and also any ordinary income portion of a lump sum distribution that they earned the right to while they were a New Mexico resident, and they'll allocate that to New Mexico. Part-year residents are going to allocate retirement earned while they were a New Mexico resident, and then any portion of ordinary income of a lump sum distribution that they earn the right to during the period they were New Mexico residents, and non-residents will not allocate any retirement income to New Mexico. And all other income. Residents are going to allocate all other income that was not covered in the prior slides to New Mexico, and if they're required to tax it somewhere else, they can take the credit for taxes paid to another state. First-year residents will allocate all other income earned from New Mexico sources and income earned inside and outside New Mexico after establishing their residency. Part-year residents will allocate all other income earned from New Mexico sources plus all income earned inside and outside New Mexico for the period that they were a New Mexico resident. And non-residents will allocate all other income earned from New Mexico sources to New Mexico. So let's look at a couple examples. In this example, Shelley and Peter lived in New Mexico for a full tax year. Peter works for part of the year in California, earning W-2 wages. Shelley has a partnership, and she gets income from providing tax services in New Mexico and California, and they have royalties from an oil well in Oklahoma. So how should they file? First thing we got to do is determine their residency. So they were residents because they lived in New Mexico for the full year. For wages, Peter is going to allocate his wages to New Mexico in full because he's a resident. So for the portion that he's going to pay California income tax on, he can take a credit for taxes paid, and he needs to include his California return as well as the worksheet for computing the credit with his New Mexico income tax return. For Shelley, Her partnership income should be allocated between New Mexico and California based on the percentage of the income that was earned in each location. So since she's going to allocate, she's not going to take the credit for taxes paid on this income. However, if she didn't have the ability to determine what was earned in California and what was earned in New Mexico, under the special rules, she could allocate it all to New Mexico and then take the credit for taxes paid. And then for their royalties, the royalties are going to be allocated to the location of the income earning property. So that's going to go on the Pit B. They'll pay the taxes to Oklahoma and they won't allocate that income to New Mexico. And they also won't be able to take a credit for taxes paid. So in another example, Shelley and Peter moved to New Mexico on March 31st from California and lived in New Mexico on December 31st. Peter worked in California before and after moving to New Mexico, earning W-2 wages. Peter worked in New Mexico after moving to New Mexico, earning W-2 wages. And Shelley has partnership income from providing tax services in New Mexico and California again, and they have royalties from an oil well in Oklahoma again. So how should they file? So first, we're going to look at their residency status. Shelley and Peter are first-year residents because they moved here partway through the year, but remained on the last day of the year. For Peter, he is going to have California wages, but those are going to be allocated in full to New Mexico for everything earned after March 31st when he established residency. But the income earned in California prior to establishing residency is going to be allocated to California using the Pit B. So he's going to take a credit for taxes paid to California for the portion of the income that he earned in California after he established residency, but allocate using the Pit B for the income that he earned in California before he became a resident. So this is a unique situation where the taxpayer is going to be using the Pit B for part of the wages and the credit for taxes paid for part of the wages. And of course, in order to use the credit for taxes paid, he's going to need to include his California return and the worksheet for computing the credit for taxes paid. Peter's New Mexico wages are going to be allocated to New Mexico in full because they were earned in New Mexico regardless of his residency status. And Shelley's partnership income again is going to be allocated between New Mexico and California based off of the percentage that was earned in each location. She also won't be able to do the credit for taxes paid, but the special rules could again come into play for that partnership income for the pass-through entity. And the royalties should be allocated to the location of the income earning property, so they are going to use the Pit B and they won't be allowed to use the credit for taxes paid for the royalty income. And as we can see, the treatment of the pass-through entity income and the royalty income didn't change even though their residency status changed, because that income source is not affected by residency status. The rules are the same for all the taxpayers. So let's go to example 3. Hector and Michelle moved to New Mexico from Colorado on June 1st with the intent to leave their domicile in Colorado and left New Mexico on November 30th with the intent to leave their domicile in New Mexico. Hector worked in Colorado before moving to New Mexico, earning W-2 wages. Hector worked in New Mexico from June 1st to December 31st, earning W-2 wages. Michelle has retirement income that she received monthly over the course of the year, and they received dividend payments on March 31st and October 31st. So how should they file? First, we have to determine their residency status again. So since they came in the middle of the year and they did not stay till the end of the year, they are part-year residents. As such, Hector's Colorado wages are going to be allocated to Colorado because they were earned before he moved to New Mexico and established residency. So he's not going to include them in the New Mexico column on his Pit B. And since he didn't include them in his net taxable income for New Mexico, he won't use the credit for taxes paid there. Hector's wages that were earned in New Mexico are going to be allocated to New Mexico in full. Michelle's retirement income should be allocated to New Mexico for the portion that she received while she was living in New Mexico from June 1st to November 30th. And the dividend payment that they received on March 31st prior to establishing residency will be allocated to Colorado using the Pit B, but the dividend payment that they earned in August while they were established New Mexico residents is going to be allocated to New Mexico. Thanks so much.